3 terms that you need to know to collect on a life insurance policy. In this video, I'm going to share with you how you can collect on a life insurance policy. Life insurance has been around for hundreds of years, and I personally have delivered many payouts to beneficiaries and different families, so here's how it works. So 3 terms you need to know to collect on a life insurance policy. The first one is insured. When the insured dies or passes away, the policy gets paid out. So this is the person that's getting coverage on themselves. The second one is face amount, also known as death benefit. This is the total amount of coverage that gets paid out once the person passes away, once the insured passes away. And the third term is beneficiary. And the beneficiary is the one that receives the payout of the life insurance policy. Payout being the death benefit face amount upon the insured's passing. Does that make sense? Now, can there be multiple beneficiaries? Absolutely. There's usually a primary, then there could be a secondary or contingent, tertiary, third in place. These typically mean is that if the primary passes away and cannot receive the life insurance, the second in place or third in place will receive it. You can also have multiple primary beneficiaries. Let's say you wanted to insure yourself for $1 million and give $250,000 to each one of your children. You can do that by splitting 25% to each primary beneficiary. Now, how do you collect on the life insurance? Well, when the insured, the person that was covered, dies, passes away, you need to notify the insurance company that that person had insurance with. That insurance company, once notified, will open up what's called a claim, and they will ask typically for a death certificate, proof that the insured passed away. Once the claims department has done their homework and verified the beneficiaries, they will then cut a check out to each beneficiary if there's multiple, and typically it's in a lump sum payment. What does that mean? All in one. So whatever the face amount was, if there's one beneficiary, they're going to get the total face amount in the form of a check. Now, unless you choose otherwise, it's typically a lump sum payment. Now, is life insurance taxable to the beneficiary once they receive that lump sum payment? According to the IRS website, generally life insurance is not taxed as gross income. I left a link on the description for the IRS so you can do your own homework. Now, what are the potential obstacles to receiving a life insurance payment as the beneficiary? The first one is a contestability period. There may be a period of time within that life insurance policy that the insurance company can contest or challenge the payout of that life insurance policy. Now, when would this apply? One example would be if the insured took out a policy and lied on the application. If they knew that they had some sort of illness and did not disclose it, that's one example of lying on the application. It's possible if within the contestability period, the insurance company will not pay out the death benefit amount. Another obstacle could be if beneficiaries are minors. So in the state of California, if you're under 18, you're going to have a hard time receiving the life insurance policy unless there's some sort of custodian in place. Verify with your state. So that in a nutshell is how you collect on a life insurance policy. Thanks so much for watching, guys. We'll see you on the next one.